I want to start off with the analysts are saying about Disney, and I want to get into what you're looking for. Looking at what the analysts are saying, consensus is a buy rating, price target of basically 104, about a 20% upside from where it is right now. How do you look at this stock? What are you expecting from the report?
I'm looking for more big picture clarity on ESPN, on Direct, and how much do they think they'll have to pay for Hulu? At the same time, what are the economic winds blowing around the ad market and consumer spend at the parks? I mean, we focus a lot on DTC, of course, as it's been a major drag, and we're hoping that flips to something that's profitable. But it's the parks business that generates most of their EBITDA. In fact, it's about 2/3 of their EBITDA that comes from the parks business. So there are a lot of moving pieces here, and so outside of just what the quarterly number is going to be, what's the big picture situation with all these different pieces?
All right, so you're talking about the DTC business. I'm assuming you're talking about streaming, Disney Plus. Then there's also the ESPN direct-to-consumer businesses. How do you view both of those right now? I mean, there's been issues about them not being profitable before, and now Disney's going to take full control of Hulu. As an investor, are you in favor of that move?
Well, it's hugely expensive, but I think it's an important piece in terms of their distribution. I mean, the key for Disney on the streaming business is getting the bundling right between Hulu, Disney Plus, and ESPN to make it attractive for the consumer to subscribe to all three. I think one of the main reasons why streaming was such a loss maker was it just wasn't priced right. And Disney's been trying to figure out what is that right relationship between the content spend and how much they're going to charge for this service. And I think they're coming around to it. So I'm expecting another notable cut in the pace of the losses in that business.
All right, so it seems like you have a lot of questions about Bob Iger's next moves. Give us a sense right now. I'm looking at Disney, forward PE of about 20 times. Right now, do you think it's valued correctly? Is this an attractive place for you to be an investor? And are you looking to trim, add, just stay where you are?
I think it's a buy here. If you look at it on EV to EBITDA basis, you're talking about a multiple about 11 times. Netflix is trading high teens. So there's a wide gap between the two. And plus with Disney, you have the benefit of the gem of their parks business, which, as I mentioned, is about 2/3 of their EBITDA with north of 30% tight margins.
All right, so as Julia Borston mentioned, she's going to be talking to Bob Iger after the bell, later on closing bell overtime. One thing that's really, at times, weighed on this stock is Disney's succession plan. As an investor, and it seems like a long-term investor, are you concerned about what are the next steps for these companies, who takes over for Bob Iger, and when Bob Iger actually moves on from the company?
Well, what I find amazing is that it has taken this long to figure out who that right person is going to be. Now, I'm sure internally they have a pretty good idea, but I mean, I think that tells you how unique Iger is, that he's one of the few people on the planet that is capable of running this business. And we haven't heard many others that they're considering, but I'm pretty confident that they'll find the right person. No one is indispensable here.
So you're surprised it took this long. Does that mean in your mind you think it's time for a successor to be named and maybe even take control as an investor?
Well, I'm going to leave the timing to them, but I think it would be good to know like who's sort of the roster of options that they're considering.